Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Welcome to this video about micro-loan bundled insurance scams. Learn how to protect your money and avoid risky lending traps. Stay with us. Need $300 to cover a car repair or rent gap? Micro-loans promise quick money in small amounts, often a few $100s, with short repayment terms. The trap starts when bundled insurance shows up, meaning insurance gets added to the loan automatically, sometimes without clear consent. Not every add-on is illegal. Some lenders offer optional coverage that can make sense. The problem is the growing wave of micro-loan offers that use bundled insurance as a pressure tool, a fee machine, or a straight-up scam. This guide explains how the scheme usually works, the red flags to spot fast, and what to do if you already signed. These offers often target gig workers, immigrants, students, and anyone with thin credit, because speed matters more than paperwork when you are stressed. How the micro-loan plus insurance scam usually works and why it costs so much. These scams run like a familiar script. First comes an easy promise, then a confusing contract, then surprise charges that are hard to stop. The insurance is the hook because it sounds responsible, even protective. In reality, it often acts like a toll booth on the road to your own money. The pitch: fast cash, instant approval, and insurance required. The first contact usually feels casual and urgent. You might see it through a text message that says you are pre-approved. Social ads aimed at people searching for cash help. WhatsApp or Telegram groups sharing lender contacts. Flyers near check cashing stores or bus stops. Next comes the pressure. They want you to act before you can think. Common lines include your approval expires today or insurance proves you are serious. Some claim loan insurance is required by law, which is a huge warning sign. Then they ask for sensitive info. That can include ID photos, a selfie holding your ID, your social security number, or even bank logins. Bank login requests are especially dangerous because they can lead to account takeover. Even if you never get a loan, you can still lose money or your identity. A bigger tell is the upfront payment demand. They might call it an insurance activation fee, policy deposit, or processing charge. Paying before you receive funds is often the moment you stop being a borrower and start funding the scam. Where the money really goes: hidden premiums, fees, and impossible refunds. Once you agree, the costs start stacking. The most common trick is to finance the insurance premium into the loan, then charge interest on it too. On top of that, they add separate policy fees, monthly add-ons, or auto-renewals that keep billing even after cancellation. Sometimes the coverage is useless. You get a policy number that cannot be verified. The insurer has no real license. Or the fine print blocks almost every claim with exclusions like pre-existing conditions, job loss not covered, or claims only valid after 90 days, even though the loan term is 30 days. That is the end of part 1. Stay tuned for part 2, where we will learn more warning signs and protection tips. Stay tuned for part 2. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.